Hello everyone. Today I'll be talking about my Cameco CCJ earnings year to date on all of my trades. There was a large run up in the stock on Friday. It was up roughly 13%, and with me being so high on the margin balance, once this position is assigned, then I will likely not do any more trading of Cameco for the rest of the year. So I thought it'd be good to just give my results from my option trades and stock trades for the year to date on Cameco. Alright, so this is my overall account and the positions I have on that. My Cameco position is roughly $18,000 at this point. I have a call option set at $10.50, which is below the current stock price of $11.07. The total percent gain on my account year to date is 433%. Okay, so let's go ahead and look at the Cameco. So Cameco is a uranium miner. If we were to compare that or plot it against the uranium price, we can say for the most part it does pretty much track it. Sometimes the uranium can be a leading indicator as to what the stock price may be or what direction it may go. So these are the trades that happened over the year. On the option trading, I started roughly around May of this year with the option trades. And so you'll see for the most part, all of these are May or after. I think May 1st was the very first ones that I put in. I did a combination of puts and calls. So put is where it drops below that price. I actually purchased the stock at that price, and I get a premium if it doesn't go below that price. It would expire worthless, and then I could rewrite another put. One nice thing about puts is they do not cost margin interest, and so they only require a maintenance of your margin, but not margin interest. So that is the one kind of difference between holding a stock or going on margin, as you are being charged a margin interest on that position, or if you're selling a put option and that put option expires worthless, then for the duration that put option is in place, you're not being charged interest on that position you have in play. So based on all of these trades, I added up all of the premiums that I had collected from these call and put options, and also the current ones that not showed up in my realized gain section yet. That came to a total of $7,800.73. So that's the total amount of gain that I received on this stock through some selling of the straight stock, but that was mainly in this dip time frame where it was coming back up. I did sell some off and purchase some as it was climbing back up. So that does represent a portion of this amount, probably about half of that, roughly $1,400. And then the rest is basically all options and assignments of those options, and giving me a total gain on this stock of $7,800. And if we were also to include margin interest on that, it would be pretty minimal, maybe $100 to $200 for the total year. For the most part, I typically didn't have a position larger than 20,000. So just kind of the purposes of giving a rough estimate on the return, I set this at 1,800 was the approximate amount of shares that I held throughout the year. In the beginning of the year, when I only had 4,000 in the account, that obviously wasn't the case. During the run-ups, I didn't have any stock at all. Averaging that out, it's going to be around 1,800 shares. And so if you were to compare that with 18 shares at $10 a share, which is what it was previous to last Friday, then you would have a total investment cost of roughly $18,000. So if you were to take this kind of average price, over this whole year, it's roughly $10. So that would give me basically a total gain of 43.34%. If you were to compare me holding the stock, you have a higher interest, margin interest that would be charged on that versus when you're selling put options. The only thing with that is your maintenance costs would be slightly higher. But as long as you have margin available or maintenance available, then you can put on those positions. And then additionally, this kind of has the same flaw as the beginning of the year. I only had 4,000 in the account on January 1st, so this isn't really an accurate representation. But on January 2nd, and then on December 5th, last Friday, and after hours, it was up to $11.50. So I took this highest price. And so if you were to buy, all of that stock at $8.94 on the 2nd, and then hold it all the way till Friday and then sell it on the aftermarket hours price, your difference in the stock price would be $2.50, and that will give you a return of 28%. And you can see with that, it still doesn't come out as well as I did with the options. And these options I really only started basically halfway through the year. So this is really only the 6-month results, but as you can see, that's quite a bit higher than if I would have just bought and hold the stock. And I chose this particular stock because it has a less downside risk, especially when my main core strategy is to actually buy and hold Tesla shares. So I wanted something that didn't really track the market or technology. That's why I kind of chose this uranium miner. They have very long, stable contracts. The uranium price was quite high during this whole period. And so with higher uranium prices, there will always be more stability to this stock in comparison to others I may chose. And as a result of that, my premium may have been lower for the capital that I invested, but still it was a nice stabilizing effect to the portfolio. which is what I needed with having a higher technology stock, and then also going so high on my margin at many points. Okay, so my total realized gain in comparison for January 1st to December 5th is 26,600 for the year to date. And then my unrealized gain is 136,000, and the bulk of that is the Tesla gains that occurred during the year. And my strategy has always been to accumulate as much Tesla as possible. At the beginning of the year, I was constantly collecting more and more Tesla shares, and then I was selling those options in the CCJ on margin, and then collecting those premiums, and then I would put those premiums into purchasing additional shares of Tesla. And that was my strategy for this. And so I was constantly adding the premiums that I collected from the CCJ, I would dump them into purchasing additional shares of Tesla. Looking at the results, it actually worked out quite well. And then later on, I added in a Ford as a counter in case the market did go down. Then I would have money available by closing out my short Ford positions and then purchasing additional shares when the Tesla stock was down low. The Ford positions would be in the short position column, which I didn't include on this, but right now that is running as minus $6,000 position. So this shows my results year to date for the Cameco. And if there's any additional trades, then I'll provide an update on that. But at this point, I'm looking at reducing my margin once the Tesla gets added into the S&P on the 21st. This will work out nicely that all of my Cameco positions will close off. And so that will give me an additional week where I can purchase some stock or write additional options. But then after that, I plan on reducing my margin down to about 50% of my core position. All right, so that's all I have for now. All right, thank you. Bye.